Well, hello folks, I'm LA Little and this is your weekly TA Wrap, where we take a look at these markets and we do it from a neoclassical perspective, each week asking ourselves what happened, why, where are we going next. That's what we're looking at. We're looking at supply and demand on the charts, the trend. The trend typically is your friend. It's hard to actually play a counter trend. It takes a lot of good timing, and the trend is up. The trend has been up. The trend continues to be up. If we look at the numbers, you can see them from last week. They did exactly what they needed to do. They pushed these things higher right across the board. The Russell, Dow Jones were the laggards, if you will, but the trend was definitely up. And if you take a look at, now we're up 4.1 here versus 2.5 down on the Russell still. But if you take a look at, if you come over to the TA Today charts, or actually the home site, come into resources, current trends, market trends, and you take a look at it here, you're going to see that everything is bullish with the exception of the utilities. Folks, 2 weeks ago it looked like this thing was going to break and actually break down on these time frames to go sideways. Instead, these hold, we go back to bullish, everything's rosy, wants to go higher, right? It's amazing how this market continues to press on despite anything and everything that we see, but it does. And as long as it does, you got to flip around. If you're trying to trade against it, you got to flip around and go with it, because that's what it's doing. Now, we know that most of what's been happening is not, this market pushing higher across the board. And we saw that on the opening numbers there. It's not as if everything's the GSBC. It's not the S&P 500, where this thing continues to push higher, 3 bars higher now on the daily. That's the extension off the break of this swing point high. We know that if we come back within 6 bars, right, that has a less not as good a chance as holding. If we go up more and come back after 6 bars, it has a very high probability of holding. And so S&Ps did exactly what you wanted. They push higher, they press higher. That's going to make it hard to break, or more hard, or harder, I guess is the word, to break on the way back. Here's that stretch higher on the weekly. So that top of that bar, 1897, we're up at 1923 now, so we can come back about 25 points and just touch the top. So nice extension. That's what you wanted to see. That's exactly what we got. That's the S&P. That's the big caps, right? And if you look at the NDX 100, you have pretty much the same scenario. These guys gap up, push higher. They're pressing into these highs. Now, they did fail on a weekly, both on the daily and the weekly charts at the highs. 37, 38, 32 up there, 37, 36 is the close, and it did get over it. So you go over it, back under it, less volume. And of course, we've seen V-shaped reversals ad nauseum. Well, this is another one, right? Spectacular V-shaped, straight back up, in your face type move over the top, back underneath. That says that that's a failure, but will we trust it, right? Will it actually continue on up no matter what, or will we get the pullback? There is an ABCD structure, I believe. Yeah, let's do the numbers here. I can't tell if it is or not. 3613. Yeah, just barely. So there's a little small ABCD structure which is already completed. And then after that on the weekly there is nothing else. If we go back, whoops, got the wrong chart there. Let me grab the charts again. If I can. Here we go. So if we go back to the daily, let's see if we got an ABCD structure in place on this one. We don't even have one right now. I mean, the one that was there is already extended. So you can see the extension on the daily. This is fairly extended. You come into the highs, you fail. That says it wants to pull back. Now, we had decent volume on Friday on the daily. So I would think tomorrow morning we're going to see it crank back up there and try to get over this potentially, and then maybe come back again. Tomorrow will be the day that the real failure happens, if it's going to happen on this time frame. Those are the big caps. If we go over to the broader markets, in particular the NASDAQ composite, and here's the composite on the weekly, you can see it's just coming back up to the resistance zone. That zone is in that 42.86 to 89 area is where it starts, about 42.86. That's where it's coming to. That's where it's trying to get to if you look at it on the weekly. If you pull over and look at the daily, that top here is 42.67. So 42.67 on the daily looks to be the spot this is trying to get. It's only about 25 points away. NASDAQ broader composite breaks 3 swing points, gets the extension off of them, right? One here, one there, another one up here. Gets that 1, 2, 3 bars extension. Actually, in this case, the breakout was here, so you have a 4-bar extension so far, and that's the result of the swing points that got broke. Because why? There was stops in here. That's exactly the way it works. You get the push over it, then you don't let them back out, right? You press them until they give up. Have they gave up yet? No, they probably haven't. They're going to try to get it up to here, and that's where we'll find out. And that would allow the NDX to push a higher too. But what we were talking about is that the broader composite, look at where it is. It's just trying to get back over the 4-4 bar now. We've got S&P's new highs, Dow Jones at the highs, NASDAQ NDX 100 at the highs. This guy's still trying to get back over the 4-4 bar. And if we go to the weakest one, which is the Russell also had a brink of multiple swing points. So it went over 2, but the 2-bar extension here really went nowhere, and you tested down on Friday with more volume. So the Russell, contrary to the other 3, is suggesting that it wants to come back, and it wants to come back fairly soon. If we look at it on the weekly, Russell on the weekly has a nice little pop up, volume okay. That top of the lowest high volume bar, 1136.95, we close underneath it. Again, Russell trying to come back. It went into resistance, failed, wants to come back. Now, the good news is that you've got the ECB this Thursday. And the ECB, of course, is pretty much telegraphed they are going to at least create some negative interest rates for the banks to force them to loan and get a 0.25% cut in the structure of their rates. Will they do QE? I don't think that's priced in, but those first 2 are priced in. So it's going to be very hard to get any kind of selling that's going to stick in front of the ECB. Potentially you get a pullback in front of it. Maybe you get the pullback after the news. Who knows? But what you do know is the event is there. And this price has been driving into that event, pulling everything up with it. But the Russell, as you can see, really not getting much of a lift. It's certainly not getting any extension off the lift and the break. And suggesting that it wants to come back down. Now, if the Russell comes back down, the key on the way, and you've got to be able to measure these things, the key on the way is going to be this big bar on the way back. That's right at the top of the support zone. I would think that would be a key one, and that also lines up with this swing point you can see. But that to me would be kind of the key area. In other words, you fill the gap, you come back into the top of this secondary support. That's where you got this big bar, this big bar. That's where they should try to buy it if they really want to buy it. You can imagine how this works, of course, is that you get a push up, some sort of a pullback, and potentially another ABCD structure that takes it even higher if it plays out to the upside. Why would it not? Well, I just showed you all the trends are up, so odds are that's the way it wants to go. It's just that this laggard is continuing to remind us that it's a struggle on the way up. Concentrated big caps, no problem. They keep pouring into those. The small caps, you know, whether it's in the NASDAQ composite itself or in the Russell, it's not where the money's going. It's going into the big caps, the liquid ones, and it's chasing those. Now, what we did see, if we pop over to a different view of this, and that is the sectors, and I want to thank Federico, because I saw Federico put the sectors out there, which is great. For all the members, shared it for y'all so that you can see what's in the sectors. The ones that have been pushing have been the IYT, and I'm going to pull over the weeklies for these. It's been the IYT, and you see it here. Push up with volume. That probably is going to throw this thing into a range trade probably immediately. And then the other one that's been pushing, of course, is the technology, the XLK. And that one, even though on a weekly it doesn't look that extended yet, we saw on the daily it's pretty extended. So I suspect these two are going to try to take a break. But what you're starting to see elsewhere is the rotation that you need. Now, if that rotation really does begin to take place, you're going to see the NASDAQ composite, the broader composite, the Russell itself, starting to attract some interest. Here's the XLB, extends over the highs, on the daily breaks out, on the weekly extends higher. On the energy sector, the XLE, this one actually pushed over this high on the daily, 95.25, closes at 95.31, pressing higher, surprisingly breaks out. The XLF pushes higher. XLF pushing up towards the highs, it's over the big bar, the breakdown bar. The XLI, the breakout here is holding. So the rotation is starting to take place. That, if it continues, which it looks like it's going to try to do so, is going to allow this market to move higher. Here's the XLV. This one's actually finding strength despite the fact that the biotechs really aren't moving that much. And then look at the XLP. XLP just storms higher, right? After another ABCD structure up, this thing wants to go again. So time and time again, we're seeing these large moves come back in, rotation come back in, money doesn't want to leave. And then finally, if I go over and I look at the world markets themselves are hanging at the highs. And we'll just go through a couple of them here, but I've got it on the weekly still. If we look at the CAC is at highs. If we look at the FTSE is pressing to highs, right up at the highs. If we look at the DAX is overall the highs and hanging up at those highs. So we've got nice exposure in Europe to equities continuing in front of the ECB. If we go over to Asia, the story's about the same. Here's the large large cap H shares that trade on the Hong Kong exchange. It's Chinese shares. They're going to try to push back up to the swing point high. The Hong Kong itself is at the highs already. On the weekly, it's at that swing point high, trying to break over it. Doesn't have the volume. It's going to be a tough deal to get over it, but if they do, it's right back at the highs. There's nothing to stop it. Even the Nikkei is getting the push. And there was big news out of the Nikkei this last week saying, you know, we're not going to raise rates not only anytime soon, but way past 2015 now. So the range down here, and there's another range above it, It's trying to come back up here and test this low area again off of these two big bars. That will be the big test as it comes back up, but it looks to me like it's going to test it. So around the world, shares are at new highs or hanging at new highs. And actually, I forgot about Taipei. If you look at Taipei, doing the same thing, pressing new highs, ABCD structure up, and then going back, segueing back into the SOX, another sector I didn't mention, SOX up there testing on those new highs, 81.70. It closes 81.67. Going to try to get over it next week. So anywhere you look, it's the same story pretty much everywhere. Everybody, everything pushing higher into the ECB decision. That typically sets up a sell the news. That can set up in front of it. That's next couple days or after it. But you know, everything's good news now. There's no bad news anymore. And that pretty much sums up what we're seeing in these markets. So I had a couple of questions emailed to me. Let me pop over there and take a look at those. So the first one had to do with, hang on just a second, let me get up the emails. The first one had to do, and if you have a question and you want to send an email, there's a couple of easy ways. You can text them to this number, or you can email me at support@tatoday.com and I'll pick that up and take a look at it. So let me pop back over to where the question was. Alright, so let me see here. Oh, there was another question on GDX again, because GDX, and I didn't go over gold, so let's do that while we're here. As a matter of fact, let's do gold first and then we'll segue back into GDX. The question was, is it a buy again? And we've talked about, I think I even covered this last week. There was a different viewer asking the same question. So I think what you're going to see is, yeah, you can get a bounce back up and test these lows, and I'm on the weekly, but it's going to be hard to get over those at this particular point in time. So you got a pretty good resistance zone now from this 124.70. Yeah, that's the primary area up to here. It looks like about 125. So 124.70 to 125. That's on gold itself. Volume 39.9, so roughly 40 million. It was only a 4-day week though, so that's really about 50 million. 50 million breaking under this big bar which had 46 on it. So you can see the correlation where you break under these swing point lows, you get under the bar, the wide price spread, higher volume bar on the way up, right? That throws you back into the lower range. Now the lower range here, if you draw them out and think of them as ranges, you pretty much had a range there, and you got another one up underneath it, and they're not quite equidistance, but you know, they're fairly close. This area is going to be tough to get back over. It's going to be very hard to get back over. Matter of fact, that zone that you see on the charts is going to be extremely hard to get back over. And that will be a retest regen on the daily time frame. So that's the upside potential, not that much on gold. The downside, of course, is to test these lows. Now, let's go look at the GDX, because the GDX is going to trade, and actually before we flip over there, you can see the gold here, got a little spike up. Yeah, I can come back and do a retest regen off of these lows. And what I'm talking about, of course, is retesting these and trying to regenerate lower. It's 3 bars so far after the break. If it takes a little bit longer, all it's got to do is test that bottom. That's usually the way it works. If it comes back in there within the next 2 or 3 bars, though, you can actually get to the top of that, and that will get you back up to that area that we talked about on the gold market. So actually, I didn't change it. I'm still on GDX here. Let me go to gold. Gold, here's the gold market. So the gold coming back up to these lows. Now, segue back now to the GDX. So the GDX has the same problem, although it got a bounce, it's going to have an issue coming back into this low. And if we look at it on the weekly basis, you've pretty much got the same story here that you saw in the gold market. You break under this area, the wide price spread bar, heavy volume was over here. It's pretty much left that in the dust. It's trying to get back into support and break down, but it doesn't quite have the volume compared to what was over there. 231, 163, Yeah, I think it'll bounce. It'll bounce back up into here, but then that's probably going to try to do some more work to the downside, and then maybe that's where you get to set up the trade, the change in trend again. Now, my friend Charles Kirk would do this and say, "Hey, this looks like a little inverse head and shoulder starting to set up," and it really does. The only problem is your neckline is kind of odd looking, but yeah, I mean one could argue that that's what's taking place. But when you break multiple swing points on the single time frame, which we did, it gives you the 2 to 3 bar extension, and then you've got to watch that retest regen. If this thing can't regenerate lower, that would be a definite sign that maybe the bottom's in. In other words, if you come back in here and you come testing this and you get over it and you push back up here and you're testing this area again, then that's a whole different story, because it can't regenerate lower. If it can't regenerate lower, that's exactly what you want to know, because that tells you that the sellers are gone at those price levels. They're not willing to sell at lower and lower prices, and in fact they're willing to buy it. So if you want to trade this market, what you really want to do is you either want to be very quick on your feet on a little small trade up into this area and dump it, or you simply want to wait, let it play out, see what it does when it gets up there. If it can't get over this high and starts to regenerate lower, then you've got to watch this test again, and in particular this bar here. If it can't break, then that would give you some place to put a stop and try to go for the move back up. But you've got to play it that way. You can't just guess. And right now it's guesswork. And matter of fact, the trend, as we talked about as we started the show, the trend is down, right? So you don't really want to be trading this long until you see some evidence of a change. All right, let me see. What was the other question? There was one other one. Let me go find it real quick. Oh, had to do with Agilent. Agilent reported earnings a couple of weeks ago, and someone was asking about this stock and whether it was turning. So this was May 16th. Agilent reported on the 12th, I think. So it made a high, came back down, volume expanded. Maybe it was on the 15th that they reported, or they probably reported on the 14th, it looks like. Volume expanded, and it gets pushed right back up. Let's see what the weekly looks like. So it didn't tell me if you want a weekly or daily time frame, so I'm just going to assume the daily. So the high here is 55.74. It trades into that and into this bar, 53.47. So you can see, if you don't look at the multiple time frames, it won't be obvious as to what's happening, but you can see why this traded in here and couldn't break it down, right? It comes into these there's two big bars here, and the intersection of those bars starts at this level back down, right? And so it comes into that level and it just can't trade lower. So on a weekly, you can see why it held, because the volume escalation here compared to what came back, there was no contest on the way back. So now flipping back to the daily, I would want to see a retrace to buy it, and assuming you're wanting to buy this thing, and I'd probably want to see it come back into this 55 area, and from there, it might be buyable, given the weekly. Because that weekly, that low, if we pull this back over, that weekly low is here, 54.87, right? That's where all the volume is, and that's back into this bar. So that 54.87 equates into this area. That's probably where I would try to look at it, because you've got decent support coming in here. Yeah, that looks like not a bad spot at all. About 54.50, 54.55. So that's the way Agilent shapes up. All right, let's see what else we got. Anybody else with questions? Let me check quickly to see. All right, so this week is going to be, it's going to be, every week's a big week, right? But this week will be really about the ECB. You've got the employment numbers on Friday, the ECB on Thursday. Those are the big two events, so you're back end loaded. how we move into the ECB is probably going to define what happens as a result of whatever they do, unless they totally surprise us and just go all aboard like an Uncle Abe in Japan and start just flooding with QE. If I know Draghi's not going to do that. He's going to give you as little as he can, and he's going to talk about all the tools in his tool chest. And so I would expect that you'll get just what the market already expects, which means if we push into that number at higher and higher levels, more than likely we're going to sell off on the number. Conversely, if you go sideways to down here the next 2 or 3 days into the number, then you could get a pop on the number. So that to me kind of is the way this week sets up, and that's the way I'd be looking at it. I think that's it for tonight. I appreciate you being there. Tell a friend, tell two. I'm LA. This is, and it was, your daily TA wrap. Have a great night. Take care of yourself, and I'll see you next time. Until then, good night.